Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this live stream recap video, I want to go over the 90% plus day trade that I took with my CFO Swing Watch members. Now, before I give you guys the exact trade that I went in on, I'm going to do a technical analysis of Apple and what I was seeing and the reason why I got into Apple calls. All right, so on the daily time frame, we've been tracking this macro descending channel for quite some time. And the reason why I've been looking at this specific descending channel is that, well, if we take a look in the past here, in early 2022, in the first half of 2022, right before the summer rally began, we had this nice descending price trend. Now, obviously, it's not a descending channel because, first of all, if I make a trend here for the support on the descending channel, it's kind of ugly, right? It looks like more of a broadening descending channel. Now, in my technical analysis book, that really doesn't exist. You just have a descending channel. So I did not draw a descending channel for this area. Now, what I do see here is a nice descending level of resistance. So once we broke out of this, we saw a nice movement to the upside, which was aided by the summer rally that took place, I believe, around late June. Now, on Apple here, we take a look on the weekly time frame now. So with that in mind, we're looking at a very, very nice potential base that is being formed. And if you take a look at my arrows as well, what am I possibly pointing to? Well, we have a potential double bottom, a very, very large macro double bottom. Now, on the weekly time frame here, you guys can also see that the left bottom is a lot lower compared to the right bottom. So what do we have here? We have a great looking higher low. And that means that there are more and more buyers than the past here, right? Where we were able to break below this 132.50 critical level of support, right? But the fact that we weren't even able to retest it again or even come below it, slightly below it like we did last time here, just gives you an idea of how many buyers are still left for Apple. Now, it also makes sense that this upcoming week, this new trading week that we have, also has Apple earnings, right? So I would expect that the upcoming few weeks before earnings will have a lot more buyers who are anticipating a nice move higher right before earnings, right? That's what we call pre-earnings move up. And that's what I also factored in when I got into this long trade, this specific day trade. Now, with Apple here on the weekly time frame, okay, if we do decide to break to the upside and we have to basically conform to this descending channel, and which is inherently bullish, we will potentially get another reaction like we saw in the summer rally. And if you guys have been looking at my previous videos and YouTube live streams, you guys know my stance on the overall market, specifically SPY. So that should also help, that analysis of SPY should also help with Apple's potential breakout to the upside. So if you guys missed out on what I've been saying on SPY, make sure you go back to the previous videos on my channel and watch them all. It will definitely help on your viewpoints and perspectives on your own SPY charts and the overall market structure and how it's looking right now. So Apple here, if it decides to break out, I'm going to see a potential retest of 172 or around 171 to 172, and eventually I'm going to see a retest above the high, the previous uptrend that we had, which was in the summer rally, right? And the specific high that we made was 176.15. Now, I don't want a simple retest. I want the price to go above 176.15. Why? Because of this higher low that we got. And in order to completely 100% confirm that this is a higher low, we need to break the previous high point, which was 176.15. Now, obviously, you might be saying, wait a second, Andrew, didn't you just say that we have a higher low and this could potentially be a double bottom? Yes, But I need to see more confirmation. And the final confirmation that we get will be us going past the 176.15 price level, right? This previous high point or pivot high point where we decide to move lower. So if you're able to get past that, then we'll eventually hit 180, which is my ultimate price target. Now, obviously, you might be wondering, wait a second, Andrew, why don't you want to see a retest of all-time highs? Well, because I have multitude of reasons, which I'm not going to get into, but some of the reasons are the overall macro, right? The economic factors that I'm pricing in here, and for the fact that Apple just had really huge news that they're going to basically lower the production of their Apple iPhones. So, those are some of the few reasons why I'm not going to see or expect a potential retest of the previous highs, which was actually exactly 182.19. Okay, so if you guys want to hear more on the overall market condition, make sure you guys check out the other previous videos first. All right. Now, Apple here is most likely going to, on the daily time frame, start breaking out because on the descending channel here, on Friday, we're able to retest the descending level of resistance. Now, this is critical here because it should tell us that buyers are willing to have the price break out. And why do we need to see that? Well, because I want to see a breakout on this inherently bullish chart pattern. So with this bullish chart pattern in mind, I want us to see a breakout before earnings. And like I said a few minutes ago, we usually get a pre-earnings run up. So I want to also basically leverage in on that potential occasion to happen and to aid in my potential trades for next week for Apple. Now, with that all in mind now, so with all that cumulative information, I want to go to the actual timestamp of when I got in Apple and when I told my members to get in. Okay, so we're going to go on the 15-minute time frame as usual, since that is one of my favorite intraday time frames for anything, right? For my entries and for my day trades that I usually do. But like I said, I am a swing trader, so I rarely do day trades. But when I do, I will rely on the 15-minute time frame the most. All right, so that's my point there. So Apple here, let me actually bring out the screenshot here for you all. Okay. So this is what I initially sent out, right? Apple 150 or 155 calls expiring on November 4th, leading up to ER. And I said you can also choose October 28th expiration date if you want as well, if you guys want to have a more closer expiration date, and right before earnings as well, or actually right after earnings. Okay, so why did I add in that weekly expiration? Because, well, we tend to get a spike in IV, which will lead us to have contracts that are overly valued thanks to that IV spike, right? There's a little bit more to that, but I'll just give you that general kind of explanation on that, on why IV is important there. So I personally chose 1028 expiration, okay, and the 155 call contracts because they were cheap, right? They're cheap, and also because they were cheap, right? I was able to add in a little bit more contracts. Okay, now obviously the reason why they're cheap is that, well, they only have a very short expiration, right? They're 10/28, October 28th expiring. So obviously they're going to be a lot more cheaper. Now, with that being said here, okay, take a look at the timestamp, 7:47 a.m. Okay, and if you go back on the chart here, this was the candlestick where I got in. Now you might be thinking, whoa. Where in the hell did you get in? Because this looks like a very bad looking inverted hammer candlestick, which is inherently bearish. Well, I got in around 144.50. And you might be wondering, whoa, why there, right? Why didn't you just wait for, let's say, 144? Because this looks like a support on your chart. And yes, it is a support. So why did I get in at 144.50? Well, because after I saw discount stick close, right, because I was tracking this Apple since on discount stick right here, right after it made its new high of the day, right after market open, okay, or exactly 30 minutes after market open. And when we came back down, we retested 144 as a level of support. So I was like, okay, there is a potential for us to have a nice momentum run up after this retest of 144. So I'm going to wait on the close of this candlestick, okay? And I'm going to wait for an entry at 144.50. And to my luck, the close of this candlestick was 144.60. So it worked out perfectly fine, right? And we opened up, right, around exactly at 144.58. And once we start to basically oscillate around that 144.50, I said, okay, let me just get in, right? So I started a position, right? An entry starter position of 144.50. And at this point, I had a gut feeling that I will have to add eventually at the more preferable entry point of 144, right? So this is where I got a little bit impatient with my entry, but I was willing to take the risk. Why? Because the contracts were cheap, and also I knew what my risk tolerance was, my own unique risk tolerance, right? And I knew how much I was risking. It's as simple as that, right? And so I got in. And eventually, okay, I told my members that I had added to my 155 call contracts at the retest of 144, right? Now, obviously, I said 150 and 155 because I don't know if my members chose either, right? Or just one of them, right? I specifically chose 155, so so I really wouldn't know if they had chosen 150 or 155, but I want to let them know that I've added, so they can add as well and average down on either of their 150 or 155 call contracts. Now, at this point, I was almost down 20% as we started hitting below 144. Now, you might be wondering, whoa, Andrew, if you're down 20% on your contracts, shouldn't you be out? No, because my game plan, and this is what I stuck with my game plan, was an entry at 144.50. And I said, okay, I'm going to be a little bit more generous with my stop loss, right? And instead of being so tight with my stop loss, I'm going to have a $1 stop loss from my entry point. Because usually, and I've said this in previous videos, I tend to have a very tight stop loss for my day trades, specifically a 50-cent stop loss. So usually a 50-cent stop loss to around $1 to $2 reward. So 50 to 1 or 50 to 2 risk to reward ratio is my usual preference for my day trades. But for this one, I want to kind of increase my stop loss because the fact that I had averaged down, which means my entry price for my underlying share price would have gone down too if I had actually bought shares at 144.50, excuse me, right? So that's the reason why I looked at my underlying share price for my stop loss instead of my actual position percentage loss, okay? Now, I don't really have a specific rule when it comes to the percentage stop loss or the actual underlying share price stop loss because it tends to be a little bit arbitrary and it gets a little bit too subjective at that point. So you guys can choose whatever you want to do. All that matters is that you follow your own game plan, your entry, your stop loss, and your target price, right? That's the most important thing that you guys should be focusing on, not on those individual, very arbitrary numbers. Now, I'm glad that I added on 144 because my stop loss was right below 143.50, right? So that's around a dollar, right? Specifically, I have my mental $1 stop loss around 143.40 to 45-ish, okay? Now, our low on this candlestick was 143.57. I was that close to getting out, right? And that's the reason why I was so glad that I was able to change my stop loss mentally from 50 cents to a dollar, right? I was glad that I said, okay, let me give myself some more room here since I did average down and these contracts are pretty cheap, okay? So if I have to get out, I'll just get out with a wider stop loss, right? And I wouldn't be losing too much relatively to me because the risk that I put on and the fact that the contracts are so cheap also relatively to me was all known, right? I knew my risks, right? So I was willing to lose a little bit more to to let the market tell me that I am wrong. Okay, so hopefully that makes sense, right? So I was so close, right? If we're just using whole numbers, right? If I did 143.50, I'll be 7 cents away from getting out, right? So fortunately for me, we started moving up higher from that low point, and we just continued to move up higher and higher and higher, right? We're making higher lows, higher highs, and eventually, as power hour started, right, near the power hour, right, which is the last hour of the market, we just continued to absolutely have a nice impulsive breakout on the overall markets, which allowed Apple to actually peak above the descending channel resistance for the first time. And it was also around the whole number level of 147. And this is where I started to take off my contracts, right? It was almost at 100%. I believe I sent in this message 12/21 when I was around, I think around 80. I think from entry point, the exact number of the contracts, I think from that point it was around 88%, right? Or 89% to my memory. So that was nearly at 90%, right? And I wanted to see 100%. Now, I didn't have enough patience, and obviously I did not get to the 100% return, as you guys can read on this message here, right? But it turned out to be over 90%. And the reason why I did not hold until 100%, even though I had the chance to, is that, well, I was not looking to risk the the over the weekend trade on this such a short-term expiration and such an out the money strike, right? I got 155 calls expiring on October 28, right? And so I said, you know what? I'm going to take profits, and I'm going to use these profits to roll over into the 150 November 4th contracts, right? And these have a lot more time, okay? And I can also still benefit from the fact that we have earnings coming up. So these contracts could still be affected by an increase or jump in IV, implied volatility. So I chose to do this one because it has more time, right? And I wouldn't be so affected by any type of wild price action that Apple might do right before earnings that could potentially end up with me losing my entire 90% profit that I had on Friday if I had held those specific contracts over the weekend. Okay. Now, the second most important reason why I didn't hold over the weekend is that I can potentially have another add to my contracts that I rolled up on Monday. And the reason why I say that is that, well, we might see another retest of this descending level of resistance, which we might get just judging by how we closed, right, on these two candlesticks, right, these last 2 15-minute candlesticks. And if we decide to come back down and retest 147, and if we can't hold 147, then there's a great chance we can come back down to 146. So if we go on the broader time frame, so if we go out further on the 2-hour time frame, 146 is a critical level of resistance that we broke out of on Friday, which is the reason why we had this nice impulsive run up on the second to last 2-hour candlestick on Friday. And if we're able to come back down and retest 146 as a level of new support instead of using as an intraday level of resistance, then I will definitely add to those contracts that expire on November 4th, 11/4, and I will look to hold out until we reach 150. Okay, and that's another reason why I got 150 strike contracts, because now if we go further out on my daily time frame, that is my ultimate price target for next week for Apple, 150. And this is before earnings. So I'm betting on Apple to run up all the way up to 150 before earnings. And guess what? Okay, I rolled up around 147.30ish. So I guess I can just say a 147 right at that point. And my risk to reward ratio is 1 to 3, right? I'm going to risk $1 once more, okay? And that might change depending on whether or not we can come back down, and I can average down at 146. Now, I'm only going to average down at 146 if we bounce at 146 and we continue to move up higher, okay? Now, it's a whole big if, right? If that doesn't happen, I will just stick to my roll-up contracts, okay, at 147 entry and have a stop loss underneath 146 and then have a profit target at 150. So that is a pretty good trade there, right? 1 to 3 risk to reward ratio. And I'm betting on this happening before earnings are here. Okay, so hopefully that was a very insightful video for you all, and hopefully I can give you guys a potential trade on Apple. So if you guys want to take the same trade, feel free to do that as well. Or hopefully I inspired you guys to look at Apple this week and inspired you guys to take either a day trade or a swing trade before earnings come up. Okay, so hopefully it's a very inspirational video for you guys to take a trade on Apple. Alright, so if you guys enjoyed this video, make sure you guys leave a thumbs up down below. And if you guys are new here and if you guys liked what you heard so far, make sure you guys hit that subscribe button. And if you guys don't know about the CFO Swinger Watch newsletter, take a look at the description box below and click on the first link that is shown. It's very, very hard to miss. And if you guys take a look at the description box and click on that link, you will find a whole amount of information about the CFO Swinger Watch newsletter. And hopefully you guys can become a subscriber so that you guys can become a CFO Discord member where you guys can get trades like this from me, either on live stream or on the live chat that we do every single day. All right. Thank you guys for listening. Thank you guys for staying. I'll catch you all on another video.